Now we'll do Jarvis Consulting again. We're using the accounts and the balance sheet, the asset accounts, liability, shareholders' equity accounts, and we're going to record business transactions. And recall that transactions are an exchange, so two things happen in these accounts, but it happens in such a way that the balance, the accounting equation still remains in balance. So here we have Jarvis Consulting, which was established May 1st, 2012. And you're asked to do the following transactions, and then you're asked to present a income statement, retained earnings, and a balance sheet. So we start then May 1st. Stockholders invested $15,000 in cash for common stock. So cash goes up $15,000, and common stock goes up $15,000. Put a plus there. And I paid $600 for office rent. I paid cash, so negative cash, $600. And office rent is an expense, so we set that up as negative. All expenses and dividends are negative. Okay, 3. Purchase 500 supplies on account. So my supplies go up 500. So May 3rd, supplies up 500, and my accounts payable goes up 500. So you see, we're still in balance. And I paid $150 to advertise in the newspaper. So negative, I paid cash, $150, and it's advertising expense, so it's negative $150 over here. Then I received $400 for services provided. So May 9th, services provided right off the bat. You put plus $1,400. And I got cash, so my cash goes up $1,400. On the 12th, I paid $200 in dividends. So I would have paid by cash, so negative $200. And over here, dividends, negative $200. Kind of running out of room there, but negative $200 over here anyway. And then we perform services. Okay, bang. 15th, perform services plus $4,200. Every time we perform services, it's revenue. Question is, did I get cash? No, I didn't get cash, so it's an accounts receivable plus $4,200. Every time I earn revenue, I either get cash or accounts receivable. But each time my revenue will increase because revenue increases as I earn. On the 17th, I paid $2,500 salaries for employees. Well, I paid cash. They wouldn't take an IOU. $2,500, and that's an expense. Over here, negative $2,500. Okay, then I paid for supplies purchased up here. So I get rid of my accounts payable. So I pay $500 in cash. So cash goes down, but my accounts payable goes down $500. And therefore I don't owe them anymore. Then I received a cash payment of $1,200 for the services provided on May 15th. So on the 15th, the guy owes me $4,200. But he's only paying me $1,200. So therefore, plus 12. And I go negative 12 here because he owes me $3,000 now, not $4,200. On the 26th, I borrowed cash from the bank on a notes payable. So if I borrowed cash, my cash would go up $5,000, and my notes payable also would go up $5,000. Okay, so on the 29th, I purchased office equipment, $2,000, paying $200 in cash and the balance on account. All right, so my office equipment goes up $2,000, but I paid only $200 cash, so my cash goes down, negative $2, and my accounts payable goes up $1,800. So notice I have plus $1,800 on the right side of the equal sign and plus $1,800 on the left side. And lastly, 30, I paid 180 in utilities, so I paid that with cash, and utility is an expense, so I have that. And I total, that's it. So now I total the effect all transactions had on cash, such as at the end of May 30th, cash has a balance, 18,270. Accounts receivable has a balance of 3,000. And supplies has a balance of 500 and 2,000 for equipment. So I add these, and I got total assets of 23,770. Now on the liability side, I have a notes payable of 5,000. So put the equal sign here. Plus accounts payable of 1,800. You can add that up. Common stock of 15,000. Revenue of 5,600. Expenses 3,430. And dividends of 200. Put it here. So it's negative dividends, negative expense. 5,000 plus that, plus common stock of 15,000 plus 5,600. And on this side of the equal sign, I have 23,770. So now I started off at the beginning of May, started this business, recorded these transactions. Now I'm going to present a balance sheet, or an income statement, statement of retained earnings, and a balance sheet. Okay then, Jarvis Consulting Inc. income statement for the month ending May 31st, 2012. Now you can write better than that, because I'm writing on an iPad. First of all, revenues, service revenues. So I just put service revenue, and that would be 5,600. Using the numbers we had at the transaction. Okay. Then we have expenses. First of all, salaries and wages. I don't have to keep putting expense. So I'm going to be adding these up, so I move to the inside column, 2,500. Then there was rent, and that was 600. And then there's utilities, and that was 180. Now you can put these in any order you want, really. And then there's advertising. Okay. And the advertising was 150. Total expenses. Whoops, no short form. Expenses. And they total 3,430. Therefore, net income is revenue minus expenses, 2,170, and we double underline that. Now we could put dollars up here if we wanted. Okay, so that is my income statement. Okay, I've gone ahead and written a heading, Jarvis Consulting Retained Earnings for the month ended May 31st, 2012. Okay, so we start off with retained earnings, beginning of the month. Retained earnings, May 1st, 0. Add net income. That we have just figured out, which was 2,170, and you could just say deduct dividends, and the dividends were 200, and so therefore retained earnings May 31st is 1,000 $970. Double underline. Okay, now the balance sheet. Jarvis Consulting Inc. balance sheet, May 31st, 2012. We start off, of course, with assets. And the first grouping of assets are current assets. Alright, and the first current asset is cash. And cash has a balance of $18,270. The next is accounts receivable. Now you have to put the whole thing. This is a formal financial statement. No short forms, must be organized and nicely and professionally. $3,000. Then we have supplies. Okay. And supplies are $500. So therefore, total current assets, total current assets, carried to the outside, $21,770. Now we have one fixed asset, so equipment, no depreciation yet. So I'll just put it to the outside, $2,000. We bought the equipment. Total assets, $23,770, just like I had on my sheet. 770. Now we have liabilities. And shareholders' equity.